बाहों में सिया के साथ सफर है सुहाना दुनिया की हर राह लगे नजर आना क्या है ये लास्ट मिनट का टेंशन रिविजन के साथ मुझे सॉल्यूशन रुको जरा ले लो ये डायरेक्शन सिया के साथ पढ़े प्रोग्रेशन
Hello students, so welcome to CR Digital Classes. I'm Hashim Ali Khan. So today I'm honored to be with you for the next 2 hours in the live session for Financial Accounting 1, BCom first year, first semester. So before going ahead, I want to have a quick few words on CR Publications. It's a platform for over 40 years. It is supporting the students in providing the best of material for BA, BCom, BSc, then MBA, BBA, and apart from that, engineering, pharmacy, for so many fields of studies, we are providing excellent service to the students so that the students can get excellent marks in their exams and also achieve their career goals. So now today I want to have you with 2 hours of live session for Financial Accounting 2. And in this session, actually the exam is tomorrow. So just few hours are left. So in this live session, I want to clear the doubts. I want to explain the pattern of the question papers and also the strategy to be adopted for attempting the examination and the important theory and problems in Financial Accounting 1. So be connected till the end. Don't skip in between because you are going to learn a lot from this session. So be prepared and keep a notebook, calculator and pen ready while watching this video, while attending this session. Because it's going to be very much productive, constructive and learning period for your life because your examination is just a few hours. Now, live class for Financial Accounting examination date is 24th of Jan 2026. First of all, the question paper consists of 2 parts, part A and part B. In part A, totally 8 questions will be given, out of which you have to attempt 5 questions. In those 8 questions, you may get theory as well as problems, any combination. Sometimes 4 problems, 4 theory questions, sometimes 3 problems and 5 theory questions. Sometimes 5 problems and 3 theory questions. Like this, different combinations may be given. And we cannot expect which type of problem will be asked in this 4 marks question. So out of 8, you have to attempt 5 questions. Each question carries 4 marks. 5 4s are 20. So 20 marks is of part A. Total marks of the question paper is 80 because 20 marks are internal and 80 marks are external. So this question paper consists of 80 marks. First 20 marks over in part A. So today's session I'm going to mainly focus on main problems, that is part B problems, because when we study, when we focus on part B, automatically the part A questions will also be covered. So why? Because time is very short. This is not the time to learn each and everything in minutely because our time is less. So we'll just revise the concepts. Now I'm coming to section B, part B. So in part B, 5 questions are there. 5 questions you have to attempt. Each question carries 12 marks. So 5 into 12, 60 marks. So 20 plus 60, 80. So how this part B will be? Internal choice will be there. First 8 questions are over in part A. Now 9A or B, 10A or B, 11A or B, like that internal combination you will have. For each unit, 1 question will be there. Totally 5 units you have in Financial Accounting 1. Each unit, 1 question, but internal choice. 9A and B from unit number 1. 10A or B, unit number 2. So you have to attempt any one. Now, the students will get in mind whether we'll get the theory question or problem in this part B. So remember, more chances are there that both will be problems. But sometimes in some units, they may give you one theory question, one problem. But problem normally is expected in every unit. From unit 1 to unit 5, we can expect one problem definitely. So your focus should be more on problems because you can score more marks in problems. If you are unable to do the problem is completely unknown to you, you don't have any knowledge, then you must write the theory. So here I'm going to explain you what type of theory questions will be asked and what are the type of problems. Recently, frequently asked questions and recent examination questions. That's what I am going to explain you. Simplicity and complexity point of view, according to our research, according to our study, what we have seen, some units are more simple, some units are difficult. So from simplicity and complexity point of view, first rank we have given to subsidiary book and rectification of errors. But this ranking may change from student to student. It's not compulsory, but according to our research, we can say first rank subsidiary and rectification. Second rank for first unit, that is accounting process. Third rank will be for BRS, bank reconciliation statement. Fourth rank is for depreciation. And last, fifth rank I have given for financial statement of sole trader. Each unit I am going to cover in this session. Now, first of all, unit number 1. As usual, in any subject, the first unit consists of the introduction of the subject. Here the subject is financial accounting. So what is financial accounting? What are the objectives of financial accounting? What are the advantages, limitations of financial accounting? So the contents are introduction to financial accounting, meaning, objective, advantages, functions, classification of accounts, how the accounts are classified, then accounting principles, accounting concepts, then accounting cycle, then journal entries, problematic part, journal entries, ledger and trial balance. So remember, these are the contents of unit number 1. Now, this question was asked in theory in March, April 2016 for 4 marks, short question in part A. What was that question? What is an account and how accounts are classified? So an account is a record of financial transactions relating to a particular person or asset or liability or income. So for any of these items, all the financial transactions are recorded at a place. That is called an account. So in simple, account shows money, from where money comes in, money goes out. Classification, in double entry system, all the accounts are classified already, you know. Personal account, real account, nominal account. In personal account, again, we have nominal, that means natural person, artificial person, and representative person. A real account consists of tangible and intangible. And the nominal account consists of expenses, losses, incomes, and gains. The broad view. Now, personal account, definition. And one more thing you remember. Briefly, I'm explaining. So if you want the perfect, complete, in-depth knowledge, visit the app. SIA app is already there. So just subscribe to that SIA app. You can get the complete information, complete detailed theory of all these questions. Now, personal account, types of person, natural person. We are all natural person. Any account open in the name of natural person, natural account. Then artificial person account, just like bank account or joint stock company is an artificial person. Then apart from that, representative account, like outstanding salary, prepaid. So these types of person. Golden rule, debit what comes in, credit what goes out. Types of real account, tangible assets, intangible. Cash, furniture, building, machinery, tangible. Intangible assets are goodwill, patent right, copyright. These are the real account. And what is the rule in real account? Debit what comes in, credit what goes out. Nominal account relating to all expenses, losses, incomes, and gains. Right? Like salary, rent, interest, commission. Golden rule, debit all expenses and losses, credit all incomes and gains. Right? That was the question asked. Now, Explain the accounting cycle. This is for 4 marks again. It was asked in previous examination. Or what is accounting cycle? May, June 24. So Jan 24, June 24. 2 times it had been asked. So remember, these type of questions are frequently asked in examination. So just have a glance on these theory questions. Remember, if you understand this theory, you can attempt the 4 marks question as well as 12 marks question. So don't underestimate the theory in financial accounting also. So the process starts with the initial business transaction. Actually, accounting is a process which consists of number of stages. The first stage is identifying the transaction. As soon as you identify the transaction, you record the transaction. After recording, posting them into ledger accounts. After posting them into ledger accounts, at the end of the year, we prepare a trial balance. After making the trial balance, we prepare the profit and loss account or statement of profit and loss. Then lastly, we make a statement of financial position, that is called balance sheet. So starting from identifying, then recording, then classifying, then analyzing, summarizing, these steps forms a process that is called accounting cycle or accounting process. Here diagrammatically it is given. Now, one more topic in this unit number 1 is trial balance. So if a problem on trial balance come in examination, you will be lucky because it's very easy problem. Without any difficulty, you can do the trial balance problem. The only rule is you have to remember which item will show debit balance, which item will show credit balance. A trial balance is a statement which is prepared at the end of the year by taking all ledger account balances. Some ledger account balance will show debit, some ledger. So all debit balances should be taken in one column and all credit balances should be taken in another column. If there are no errors in the accounts, trial balance will get tallied. So here, from the following balance, prepare Ram's trial balance at 31st March 2020. Sales 35,000, purchases. Now, you have to remember which item will show debit balance and which item will show credit balance. Now, I expect that everybody is having a pencil or pen ready. So note it down. So sales, the sales account always will show credit balance. Then purchases always will show debit balance. Then capital always will show credit balance. Sundry debtors, it will always show debit balance. Furniture, debit balance. Sales return, debit balance. Remember, sales account will show credit balance. And opposite to sales is sales return. It will show debit balance. Then drawings will always show debit balance. Bills payable will show credit balance. So all assets will show debit. All liabilities will show credit. Bills payable is a liability, credit side. Drawing, then sales return, furniture is an asset, debit balance. Like that you have to remember. Now these things, how to prepare that? Here I am showing. Ram's trial balance at 31st March 2020. Purchases debit balance. Sales credit balance. Capital credit balance. Just now I told you. Then sundry debtor debit balance. Then furniture debit balance. Sales return debit balance. Drawings debit balance. Bills payable credit balance. Now find out the total of debit column as well as credit column. Here we got 1 lakh rupees in both the columns. That's all. 4 marks easily you can get. In December 24, it had been asked for 4 marks. So these type of problems we can expect. Now, one theory question was asked in January, December 23 and January 24. 2 times it had been asked for 12 marks. What is accounting? What are the objective and functions of financial accounting? There are different definitions for the term accounting. Accounting means it's an art and science of recording, then classifying. First of all, identifying, then recording, then classifying, then analyzing, interpreting, communicating the financial information of the business. That is called accounting. Now here, American Institute of Certified Public Accountant, AICPA, 1941. They have said accounting is an art of recording, classifying, summarizing in significant manner in terms of money transaction and events that which are in part at least of financial character and interpreting the result thereof. Not only recording, but making the analysis and making the interpretation. That is called accounting. Now, accounting are of different types: financial accounting, cost accounting, management accounting, corporate accounting. So many types of accounting are there. What is financial accounting? The accounting which is concerned with preparing the profit and loss account and balance sheet. वो अकाउंटिंग जो प्रॉफिट एंड लॉस अकाउंट और बैलेंस शीट बनाने के लिए अकाउंटिंग बनाया गया है उसको फाइनेंशियल अकाउंटिंग बोलेंगे. The main purpose is to prepare the financial statements. So, profit and loss account and balance sheet. To make profit and loss account balance sheet, the accounting is called financial accounting. Now, the main objective of financial accounting is to find out what is the purpose of financial accounting. To find out the profit or loss and to find out the financial position, that is called balance sheet. Right? In most cases, financial is simply referred to accounting. Objectives. There are many objectives of financial accounting. The first objective is to systematic and accurately record the financial transactions. Systematically recording the financial transactions and to maintain records of income, expenses, losses, etc. To evaluate the profitability, to find out the financial position. These are the objectives of financial accounting. Then functions of financial accounting. Different functions are there, that is recording, classifying, summarizing, or protecting assets, analysis and interpreting, communicating. Right? Remember, all this complete theory you can get from SIA app. So do visit SIA app, subscribe, and definitely you can get the complete whatever theory which you are seeing here, the same theory you can get in the app. Now, discuss briefly the various accounting concepts and conventions. This question was also asked in April 2025. Last year it had been asked for 12 marks. So, accounting principles are the basic guidelines. Accounting concepts means the basic guidelines or rules that must be followed by every accountant in the whole world whenever he is recording the transactions. It is understood that every accountant follows those guidelines. Those are called accounting concepts. If the business does not follow accounting concepts, then what will happen? We cannot achieve the objectives of accounting. The objective of accounting is to find out the profit or loss, to find out the financial position. That we cannot achieve if we do not follow accounting concepts, rules, basic principles. Now, classification of accounting principles are accounting concepts and conventions. We broadly classify the guidelines into two: concepts and conventions. Concepts are the basic assumptions which should be followed by every accountant whenever he is performing the function of accounting. So, accounting concepts. Accounting concepts are the basic functions, assumptions, principles, and rules that guide the classification and presentation of financial statements. Right? The basic financial accounting concepts are business entity concept. Already you know, from accounting point of view, the owner and the business will be treated two separate entities. So any transaction conducted by the owner with the business will also be recorded. Then money measurement. Only those transactions which can be measured in terms of money will be recorded. Going concern concept. It is assumed that the business is going to continue for a long period of time. Accounting period concept. The life of the business is divided into part consists of 12 months. That means accounts are prepared for 12 months. After every 12 months, the accounts are closed and we calculate how much is the profit or loss. The period means the accounts for which the accounts are maintained. The period for which the accounts are maintained. Cost concept, dual aspect concept. These are the accounting concepts. Now, accounting conventions. Actually, what is the difference between concepts and conventions? The concepts are the assumptions which should be followed throughout the year. Whenever we are conducting the accounting, recording, classifying, we have to follow accounting concepts. But accounting conventions are those assumptions that should be followed while preparing the financial statements. At the end of the year, when we make financial statements, we normally follow accounting conventions, right? Conventions का मतलब that rules which make the accounts consistent and comparable. So conventions are convention of conservatism, convention of consistency, convention of full disclosure, convention of materiality. These four are the conventions. Till now, I have explained you the theoretical part of this unit number 1. And one problem I have explained. Now, the other problems. Problems on journal entries and ledger. Journal entry is the ABC of accounting. Accounting will start from journal entry. What is journal entry? Whenever a transaction takes place, we have to find out which account to be debited and which account is to be credited. One account will be debited, the other account will be credited. That is called double entry system. So here one question was there which was asked in examination. April 2025 for 12 marks. Very easy. 12 marks it had been asked in April 2025. What is that question? Business started with cash deposited in bank. Business was started by having a cash of 3 lakh in the bank. The money comes in. The bank account debit, capital account credit. When the owner invests money in the business, it is called capital. The bank account debit, the entry will be bank account debit 3 lakh, capital account credit 3 lakh. Being the business started with cash deposited in bank. This is called narration. So every transaction you have to give narration. Second transaction, cash deposited in bank. Cash is going out. So cash account should be credited. What goes out is credited. Where we are depositing the money? In the bank. Bank is the receiver. So bank account debit, cash account credit. Bank account debit 80,000 and cash account credit 80,000, being cash deposited in bank. 2 transactions completed. Third, machinery purchased on credit from Z. When we purchase the machinery is coming in. So machinery account debit. From whom we have purchased? From Z. Z account should be credit. So machinery account debit, Z account credit. Now see here. Machinery account debit 50,000, Z account credit 50. Being the machinery purchased on credit. So machinery purchase. Now July 5th. Furniture purchased from B for cash. When cash is paid, we are not concerned with B. We are not concerned with the person. Furniture is purchased. Furniture is coming in. The furniture should be debited. And cash is going out. So cash should be credited. The furniture account debit, cash account credit. Furniture account debit 20,000, cash account credit 20. Being furniture purchased for cash. Over 5th row. Goods sold to B. So name of the person is given B. That means it's a credit sale. It's a credit sale. So B's account debit, sales account credit. B's account debit, sales account credit. Being the goods sold on credit. Then goods returned by B. First we sold the goods to B. Now B has returned back the goods. It is called sales return. So sales return account debit, B's account credit. Sales return account debit, B's account credit. Next comes goods sold for cash. That means goods are going out, but cash we are getting. Cash is coming in. So cash account debit, sales account credit. So you can see cash account debit, sales account credit 10,000. Being goods sold for cash. Then cash received from B. Cash is coming in. So we debit cash. Who is the giver? B is the giver. So cash account debit, B's account credit. Here you can see. Cash account debit, B's account credit. Being cash received from B. Now 28th of July. 28th of July, advertisement expenses. Then 30th of July, stationery purchase. 31st July, paid rent. In all these cases, you can see money is going out. So advertisement expenses account debit, cash account credit. Here stationery purchase, so stationery account debit, cash account credit. Paid rent, rent account debit, cash account credit. All these are the payment. These are the expenses. So cash account should be credited. So you can see here. Advertisement account debit 5,000, cash account credit 5,000. Stationery account debit 2,000, cash account credit 2,000. Then last one, rent account debit, cash account credit. So in all these cases, cash is going out, so cash account is credited and the expenses are debited. That's it. So easily you can score 12 marks by doing this problem, this type of problem. So journal entry is the stepping stone or basic ABC of accounting that every student must know. Now, record the following transaction in personal account of Raman. Previous problem was journal entry, and this is the problem of ledger account. We have to open the ledger account of Raman. Some transactions are conducted between the business and customer Raman. So what are the transactions? Sold goods to Raman, 5,420. This is September 1st, 1998. Actually, this was the problem asked in examination. Now see here. Raman account. Sold goods to Raman. What is the entry? Raman account debit, sales account credit. So Raman should be debited. So here you can see two sales, 5,240. This 5,240. Sold. Secondly, received cash from Raman and allowed him discount. Cash 5,150, discount 270. When we receive cash, cash account debit, discount allowed account debit, Raman account credit. So Raman account should be credited. So here, by cash 5,150 and by discount 270. Two transactions are over. Now Raman bought goods. When Raman bought goods, we sold the goods. जब रमन goods खरीदा है तो हम goods को बेचे हैं. We have sold the goods. So entry will be Raman account debit, sales account credit. So Raman should be debited. Two sales, 6,000. Right? Then we have received cash from Raman on account. Received cash. Cash account debit, Raman account credit. So Raman के account को credit side 2,000. So here you can see by cash 2,000. Next comes cash received from Raman on account over. Now balance from last month's brought down. So here you can see balance brought down 1st October 4,000. Right? Then after that, sold goods to Raman. Raman account debit, sales account credit. तो रमन को डेबिट करेंगे टू सेल्स 10,000, right? Then we have cash received from Raman and allowed him discount 3,960 cash and discount 40. When we receive the cash, cash account debit, discount allowed account debit, Raman account credit. So here I am crediting Raman. Here we are crediting Raman. By cash 3,960, discount 40, right? And here, this one 20th October. Now last, October 31st. What is the transaction on October 31st? Received cash in full settlement of Raman's account 9,800. Complete cash is received 9,800. Cash account debit, Raman account credit 9,800. So Raman account is credited. Here you can see by cash 9,800. Still there is a balance of 200 that should be transferred to discount allowed. Because in the problem it is given Raman's account is settled, closed. So whatever balance you are getting $200, 200 rupees, and that 200 rupees will be transferred to discount allowed. Account closed. 14,000 debit side, 14,000 credit side. This is the problem. So I have completed unit number 1, that is accounting process. What we have learned, the theory. what is accounting, what is financial accounting, what are the objectives of accounting, then what is accounting cycle, accounting concepts and accounting conventions, theoretical part 1. Problematic part, we have learned how to make the trial balance and how to pass the journal entries and how to make the ledger account. This is a revision for unit number 1. Now unit number 2, subsidiary books and rectification of errors. These two topics are there in unit number 2. This is very important and easy. Theory related topics related to subsidiary books and accounting errors. Theory regarding types of subsidiary books and what are the types of errors. These two are theory. And problematic part, cash book. How to make the cash book, particularly 3-column cash book. This is more important, frequently asked in examination. Subsidiary book, other subsidiary book, petty cash book is there, sales day book is there, then rectification of errors. Then these are the problematic part. In previous examination, very frequently they have asked you what are the differences between debit note and credit note. It was asked in December 24 for 4 marks, फिर May June 24 4 marks, फिर February March 23 4 marks. So every time 4 marks. Very frequently it is asked. Debit note and credit note will arise whenever there is return of goods. When the customer returned the goods, when the customer has returned the goods, sales note will be prepared by the seller and debit note will be prepared by the buyer. Example, I sold goods to you on credit. Some goods I have sold. Later on, you have returned some goods back to me. You are the buyer, I am the seller. When you return the goods, I will make a credit note and you will make a debit note, right? So what will happen? The balance due will get reduced. The amount due from the customer will get reduced by making this credit note, right? So here, a debit note is a document issued by the purchaser of the supplier when the goods are returned, indicating reduction in the amount paid. Similarly, all these are the differences. If you want the theory, go to the app. SIA app, you can get the complete theory of this question. Differences between debit note and credit. Briefly, I explain you. Credit note will be issued by supplier, debit note will be issued by the buyer. So when this debit note, credit note will arise, whenever there is return of goods by the customer. From the following particulars, write up the sales day book of Sridhar, a dealer in furniture. This is the problem on subsidiary book. Sold goods on credit to Krishnamurthy. 10 tables at 120, 20 chairs at 40. June 16th. So 2 transactions are there. First transaction is sold goods to Krishnamurthy. So what we have sold, 10 tables at the rate of 120. So 120 into 10, 1200. Similarly, 20 chairs into 40. 40 into 20, 800. So 1200 के tables है, 800 के chairs है. These are the sales to Krishnamurthy. Similarly, June 16 sold to Lakshmi Enterprises 5 almiras at 2400, 20 chairs at 60, 2 dining tables at 1200. Sridhar offers trade discount. Sridhar is the businessman, the owner of the business. He is allowing 5% discount for sales up to 5,000. किसी का बिल 5,000 का रहेगा तो 5% डिस्काउंट, 2,000 रहा तो 5% डिस्काउंट. Then sales beyond 2,000, 10%. तो कोई कस्टमर 2,000 से ज्यादा का परचेस करा तो 10%, 2,000 तक अगर परचेस करा तो उसको 5%. That is a discount. This was asked in May June 2024, 4 marks. So this type of question may be asked. So how to solve, how to find, how to prepare this sales day book? Here you can see sales day book. Date, particulars, outward invoice number. For the sake of formality, we have to open these columns. These columns will not be used in recording the transaction. So sale in a return outward, then ledger folio. Again theoretical. Amount column. 3 columns at the extreme right hand side. So first of all, to whom the goods are sold? To Krishnamurthy. So here Don't write to or by. You should not write to or by. Simply Krishna Murthy. How many tables? 10 tables, 120. 10 tables, 120, it is 1200. Then 20 chairs at 40. 20 chairs into 40, 800. Total bill 2000. So up to 2000, how much is the discount? 5%. So less trade discount at the rate of 5% of 2000, 100. So 2000 minus 100 is 1900. One transaction over. Second transaction, sold goods to Lakshmi Enterprises. This is Lakshmi Enterprises. Now see, Lakshmi Enterprises. What we have sold to Lakshmi Enterprises, 5 almirahs. It is given in the problem. 5 almirahs at 2400. It comes to 12,000. 20 chairs at 60, 1200. Then 2 dining table at 1200. It comes to 2400. So total bill is 15,600. Now from 15,600, we deducted trade discount at 10%. 2000 से ज्यादा का बिल अगर बना तो 10% discount. Here more than 2000, 15,600. So 10% is a discount. 10% comes to 1560. Deduct, we'll get 14,040. So one bill is 14,040. The other bill is how much just now we have prepared. Here you can see 1900. 1900 plus 14,040. Total sales are 15,940. Here you can see 1900 plus 15,600. 15,940. That's it. So simple. That is called sales day book. Similarly, same format will be used for purchase day book also. That's all. Now one more question. This is April 2025 OU. 4 marks. It is petty cash book. Drew impressed from head cashier, opening balance 300, paid 2 stamps, paid for cleaners expenses and cartage, paid for office repair, prepare petty cash book. Now see carefully. This is the format. Cash received, date, particulars, voucher number, total payment, postage and stationery, cartage and conveyance, office expense. By seeing the problem, we have to find out which columns are needed. Right? To opening balance, the Impress system was started with 300 rupees. So left side, cash received 300. So now payments, stamps 25 rupees, buy stamps, in total payment 25, postage and stationery 25. Stamps के बाद for cleaners expenses, so cleaners expense, office expense here 20 rupees cleaners expense we have taken here. Next comes cartage total payment 25 rupees, cartage 25 rupees. Office expenses 50 rupees total payment and 50 rupees office expense. Total payments, if you find out the total of total column, it comes to 120 and 25, 70, right? The balance. At the beginning of the month, he was having 300. Out of 300, 120 was spent. 300 minus 120, 180 is the balance carried out at the end of the month. Now we'll come to the next month, beginning. To balance brought down 180 and to cash 120. Whatever cash is spent, that will be reimbursed by the head cashier. By the head cashier, he will reimburse 120. That's it. So this is the problem. Now, very important. The subsidiary book comparatively is easier. The second part is rectification of errors, correction of errors. Pass journal entry to rectify the following errors. This was the question asked in June 24 for 4 marks. Small question. Now, goods taken by proprietor 4,000 have not entered in the books at all. When the entry is not at all recorded, it is called error of omission. क्या कहते हैं इसको? Error of omission. Now we pass the entry. When the goods are taken by proprietor, it is called drawings. Cash draw karo या goods draw karo by the owner, it is called drawings. Drawings account will be debited. But when goods are taken, purchases account should be created. अगर owner cash निकाला तो drawings account debit, cash account credit. अगर cash नहीं निकाला, goods निकाल लिया, then drawings account debit, purchase account credit. So here you can see drawings account debit, purchase account credit for being the goods taken by the proprietor, now rectified. Right? Now, second transaction is Rupees 1080 received from Rahul was posted to the debit of his account. Actually, 1080 was received from Rahul. So entry will be cash account debit, Rahul account credit. So Rahul account should be credited, but by mistake his account was debited. Now we credit with double the amount. So 1080 plus 1080, 2160. Rahul will be credited by 2160. Rahul will be credited by 2160 and debit should be given to suspense account. क्योंकि एरर खाली राहुल के अकाउंट में है तो राहुल का अकाउंट एक्चुअली क्रेडिट करना चाहिए था, बाय मिस्टेक इट वाज डेबिटेड. नाउ वी क्रेडिट राहुल अकाउंट विद डबल द अमाउंट. तो राहुल अकाउंट इज क्रेडिटेड, सस्पेंस अकाउंट इज डेबिटेड, राइट? सेकंड ओवर. Now third transaction is rupees 200 being purchase return was posted to the debit of purchase account. गलती से जो अकाउंट को डेबिट कर दिया उसको क्रेडिट करना in order to rectify whichever account by mistake we have debited. Now we credit. Rupees 200 being purchase return posted to the debit of purchase account. So now what we will do? Purchase को by mistake debit कर दिया, अब purchase को credit करेंगे. तो suspense account debit, then purchases account credit. Purchases account को credit करेंगे, purchase return को credit नहीं करेंगे. We have not credited to purchase return. Now we credit purchase return. So two credits are over. Purchases को credit, purchase return को credit. So debit will be given to suspense account. Suspense account debit, purchase account credit, purchase return account credit. That's it. Now last transaction is rupees 400 received a discount was posted to the debit of discount allowed account. 400 is discount receipt. तो discount received को credit करना चाहिए था, नहीं किए. What we have debited? We have debited to discount allowed. Now we credit discount allowed. Discount allowed को credit करेंगे, discount received को भी credit करेंगे. तो suspense account debit, discount allowed account credit 400. Discount received account credit 400. So debit 400 plus 400, 800. Now you can see suspense account debit 800, discount allowed credit 400, discount received 400. That's it. Or next is explain the various subsidiary books. This was asked in 2023 for 12 marks. Or what do you mean by subsidiary books? Explain the types of subsidiaries. April 2025, last year only. It was asked for 12 marks. And define subsidiaries, explain different types of subsidiaries. KU for 12 marks. What do you mean by subsidiary? December 24, 12 marks. So you have seen this question had been asked multiple times in the past. So this is very important. Frequently they will repeat this question. What do you mean by subsidiary books? What are the different subsidiary books? Subsidiary books are the books of original entry. Whenever transaction takes place, it will be recorded in the subsidiary book. In the subsidiary book. And subsidiary book will record all the like transaction at one place. Example, sales day book is a subsidiary book. All credit sales will be recorded at sales day book. All credit purchase will be recorded in purchase day book. All cash transaction will be recorded in cash book. So here meaning is given. Subsidiary books are the accounting books of original entry which transactions similar nature are recorded. Example sales. All this theory you can get from SIA app. Remember. Then types of subsidiary books. So broadly we'll divide the subsidiary books in a purchase book. It's a book which record all credit purchase of goods, not cash purchase. The format will be date, particulars, inward invoice, ledger folio, amount. Similarly, sales day book. All credit sales will be recorded in sales day book. And the format is like this. Then next one is purchase return day book. Purchase return book. The format is name of the supplier, ledger folio, debit note, amount. Sales return book. Then format is sales return book, name of the supplier, ledger folio, credit note, amount. Bills receivable book, this is the format. Bills payable book, this is the format. Cash book. Cash book is a subsidiary book in which all cash transactions are recorded. Cash received and cash paid. All are recorded in cash book. This is the cash books again are divided to single column cash book, double column cash book, three column cash book. Now forms of petty cash book. Another, subsidiary book is petty cash book. Petty means small. All the small payments are recorded in petty cash book. This is the format. Journal proper, eighth book. This is the residual book. Any transaction which does not fit in the first 7 books, that transaction will be recorded journal proper. And the format of journal proper is same. Date, particulars, LF, debit, credit. That's all. Over. Now the next thing is problem on 3-column cash book. 3-column cash book problem is very, very important. Remember, note it down. You have to focus more on 3-column cash book, more chances are there. So this was the problem asked in April 2025, last year, OU, for 12 marks. Very easy problem we can see. Prepare 3-column cash book from the following particulars. December 1 to December 15. 15 days transactions are given. 3-column, date, particulars, LF, discount allowed. DS stands for discount allowed. Then cash, bank. These are the columns. 1, 2, 3, 4, 5. 5 columns on debit side, 5 columns on credit side. 1, 2, 3, 4, 5. So here, 1, 2, 3, 4, 5, 6 columns. 6 column debit side, 6 column credit side. Right? Now, first of all, cash in hand. Beginning of the month, December 1st, 2012, cash in hand 1800. To balance brought down 1800 cash. Bank 13,000. So bank column 13,000. Right? So opening balance we have taken December 1st. Then paid into bank 500. When money is paid into bank, the entry will be bank account debit, cash account credit. So bank ko debit karenge, this bank account debit. Or cash account should be credited. This is the credit side. Ye cash account credit. It is called contra entry. A transaction which appears on both the sides of the cash book is called a contra entry. So here debit bank, credit cash. Or next, bought goods by check. Check means we have paid the amount to credit side. All receipts should be taken on debit side. All payments should be taken on credit side. So 1300 we have paid. So this 1300 purchase of goods. Next, purchased furniture for cash. Cash column 400. This. Then received from cash from Mohan and discount allowed 10. So received, that should be taken on debit side to Mohan, 790 cash and 10 discount. Then drew from bank for office use, contract. Drew from bank, bank से पैसे निकाले तो cash account debit, bank account credit. So cash को debit करेंगे here. Cash account is debited 400, bank account is credited 400. This is the contract. This is the contract. So contra entry will occur twice, when we deposit the money and when we withdraw the money. Next comes received from Raj a check 600. Received from Raj a check 600. So bank column 600. You can see here 600 rupees bank column, right? Next comes received a check from Raj. Then check of Raj returned dishonored. When we receive the check, we have taken on the debit side. When the check is dishonored, that same check we have to take it on the credit side. How much check has been received? 600. Now this 600 should be taken on the credit side. By Raj account 600, check dishonored 600. This 600. Over. Now simply we have to find out the balance. Take the total of the debit. The discount allowed is 10. Whereas 2,990 is the total on the debit side cash. From 2,990, subtract all the values, you will get 2,009. This is the balance carried down. So here balance brought down 2,009. Similarly, bank column debit side 14,100. तो 14,100 में से credit side के पूरे items minus कर देंगे तो 11,800. This is the balance carried down. 12 marks. Over. So what is accounting error? What are the different types of errors? Explain briefly. Theory question. Actually, error means mistake. The accountant may commit the mistake due to carelessness, or the accountant may not have the knowledge, perfect knowledge of accounting. Errors may crept in. How to rectify the error? In ordinary language, we can just erase it, but in accounting, we should not erase. There is a procedure of rectifying or correcting the errors. The meaning of accounting error, it has been given. Then errors are mainly divided into two types: not disclosed and disclosed. Errors not disclosed by the trial balance means ऐसे error जो trial balance में disclose नहीं होते. Trial balance will get tallied, but still there are errors. Only when we scrutinize the accounts, we come to know that these are the errors. These errors are not reflected in the trial balance. What type of error? Error of principal, error of omission, error of commission, compensating error. That's all. So these four are examples: error of principal, error of omission, error of commission, compensating error. These are the errors. Then errors not disclosed, errors disclosed by trial balance. ये तो not disclosed. Now errors disclosed by trial balance. ऐसे errors जो trial balance में disclose हो जाती है. Example: the trial balance will not get tallied. The trial balance will not get tallied. When the error is error of wrong side of posting. Double entry system, one account is debited, another account is credited. But sometimes the accountant will debit both. Debit one account and debit another account. This error will be disclosed in the trial balance. Secondly, error of wrong side of posting. Error of wrong amount posting. Actually, double entry system, the same amount should be debited in one account, the same amount should be credited in another account. Suppose if the amounts are taken different, एक account में debit करे 500, दूसरे account में credit करे 50, your trial balance will not tally. Error of totaling. While totaling the subsidiary book, purchase day book का totaling है, sales day book का totaling है, या cash book totaling, if you make any totaling mistake, then it will be reflected in the trial balance. These are the errors. Errors of forwarding balance, error of posting, all these are the errors that you can go through. Advantages of sales return, purchase return, bills payable, all the advantages and disadvantages are given that you can go through. Now, problem on rectification of errors. Two concepts are there in this unit. One, subsidiary book. We have finished the problems on subsidiary books. Now, rectification of errors theory we have discussed. No problems. This problem had been asked in July 2023 OU for 12 marks. Now, give journal entries to rectify the following errors. Purchase of goods from rice amounted to 25,000 has been wrongly passed through sales book. Actually, goods are purchased. The purchase account should have been debited, but by mistake it is not debited. Sales account is credited. Sales account is credited. तो दो मिस्टेक हो गए. एक परचेस को डेबिट करना था, नहीं किए. बाय मिस्टेक सेल्स को क्रेडिट कर दिए. तो बाय मिस्टेक सेल्स को क्रेडिट कर दिया. अब सेल्स को डेबिट करेंगे, परचेजेस को भी डेबिट करेंगे. तो एंट्री विल बी purchases account debit, sales account debit to suspense account. To suspense account. Now you can see here, purchases account debit 25,000. Because we have purchased but not recorded. Now we record. So purchase account will be debited. Sales account will also be debited. And rice account should be credited. Double the amount. 25,000 plus 25. 50. Secondly, credit sale of goods 30,000 to Mr. Anis has been wrongly passed through purchase. Opposite. Credit sale करे किसको? Mr. Anis. तो entry will be Mr. Anis account debit, sales account credit. लेकिन sales को credit नहीं करे. Sales को credit नहीं करे. अब हम sales को credit करेंगे. किसको debit कर दिया? By mistake it was debited to purchase account. तो purchase को credit करेंगे. By mistake we have debited purchase. Now we credit purchase. तो Anis account debit, purchases account credit, sales account credit. Here you can see Anis account debit, purchase account credit, sales account credit. दोनों को add कर दो 60,000. So watch this session. After completing the session also, twice, thrice if you see, then definitely you can understand more. Now, what is the third one? Sold old furniture 3,500 passed through sales day book. Actually, when we sell old furniture, it should be taken as cash account debit, old furniture account credit. Furniture account credit. But they have not credited furniture account, they have credited sales account because it was passed through sales book. Sale करे furniture, बट दे हैव टेकन इन सेल्स बुक. अब सेल्स को डेबिट करेंगे, फर्नीचर को क्रेडिट करेंगे. सेल्स अकाउंट डेबिट, furniture account credit. You can see sales account debit, furniture account credit. Then paid wages for the construction of building debited to wages account. When we pay the wages for constructing the building, building account should be debited. But they have not debited building, they have debited wages. तो wages को credit करेंगे. Building account debit, wages account credit. Building account debit, wages account credit, 1 lakh. Right? Next is the sales day book is undercast. Undercast means taken less. कम amount ले लिए, that is called undercasting. तो sales day book is undercast by 2000. तो sales account we credit 2000 because sales account will show credit balance. Credit balance में 2000 less लिए, तो sales account को credit करेंगे. Suspense account will be debit. Suspense account debit, sales account credit. Suspense account debit, sales account credit. Sales book is undercast. Next one is paid 10,000 for the installation of machine debited to wages account. Machine installation के लिए wages pay करे 10,000, but by mistake it is debited to wages account. Now we credit wages account and debit machinery account. So machinery account debit, wages account credit. Yeah, machinery account debit, wages account credit. Right? Now last one is the purchase day book is undercast, taken less. The purchase account will show debit balance. So debit side come liye. Now we debit. Purchases account debit, suspense account credit. So here purchase account debit, suspense account credit. That's all. Finished. So over this problem, 12 marks. Finished. So we have completed 2 units. Now we are in the 3rd unit. The 3rd unit is bank reconciliation statement. What is the first unit? Accounting process. 2nd unit, subsidiary book and rectification of errors. 3rd unit is bank reconciliation statement. So bank reconciliation statement concept related to BRS theory. What is cash book? What is passbook procedure? And problematic preparing the BRS. So comparatively this chapter, this unit is small unit. Examination में आपको you may get one theory question, one problem for 12 marks from this unit. One theory, one problem. Less chances that both problems you may get. Sometimes you may get both problems, but one theory, one problem, more expect. Now, this question was asked in March 2023 OE for 4 marks. What do you mean by cash book? What do you mean by passbook? Cash book is a book which is maintained by a business to record all cash receipts and cash payment to find out the closing balance. But passbook is a statement which is given by the banker regarding how many transactions. It's a statement given by the banker showing the transaction with the customer. The customer, how much money they have deposited, customer, how much the money they have withdrawn. The complete detail of the transaction will be given in the passbook. So passbook is the property of the banker, whereas cash book is the property of the businessman. So that is for 4 marks. Next is define bank reconciliation statement. This is very, very important. Asked in June 24, then April 25, then KU, again it was asked. So 3-4 times they have asked. So comparatively this question is very, very important. What is bank reconciliation statement and how it is prepared? Right? Bank reconciliation statement is a statement which is prepared to compare, to find out the reason why the bank balance as per cash book and bank balance as per passbook are different. What are the reasons why the cash book balance and passbook balance are different? When you open the cash book, your cash balance is showing suppose 50,000. When you open the passbook balance is showing 40,000. So why the balance is different? To find out that why, we have to prepare the bank reconciliation statement. So normally every accountant will make a bank reconciliation statement at least once a month to find out why the difference in bank balance and cash book balance is occurring, right? Number of reasons are there. There are number of reasons why there is difference between bank balance as per cash book and bank balance as per passbook. For example, simple example I'll give you. checks issued but not presented for payment. When we issue the check, it will be recorded in the cash book, but it is not yet presented for payment, not recorded in the bank statement. That's why there is a difference. Similarly, checks are deposited but not created by the bank. When we record the check in the cash book, but the check is not recorded in the bank statement, again there is a difference. Similarly, bank interest or bank charges, the banker has recorded in the passbook, but we have not yet recorded in the cash book. So again, there may be difference. So, and errors. Sometimes errors may creep in the cash book or in the passbook. So many causes are there, reasons are there why difference in cash book and passbook may occur. Now, how to find out? Procedure for preparing BRS. This was asked in examination. So, how to prepare the bank reconciliation statement? The first thing is comparison of entries and identification of causes. तो पहला काम ये है कि you have to open the cash book, you have to open the passbook and compare the entries, whether every entry in the cash book is appearing in the passbook or not appearing. You have to find out the items which are there in both, identifying the entries and causes. Secondly, settlement of differences. अब जो भी differences आ गया, तो after the difference are identified, the next step is reconcile. A bank reconciliation is prepared to adjust. To adjust that, we have to make a bank reconciliation statement. Thirdly, recording of missed transactions. Some transactions are missed. Missed means it is found only in the cash book but not in the passbook. Some transactions are there in the passbook but not in the cash book. That are called missed transactions. That will also be recorded. Then balancing of columns. Finally, we have to find out the balance. Pro forma of BRS starting with favorable balance. In examination, previous examination, they have asked, give the format of how to prepare the BRS. So this is the format. And all these formats you can get from SIA app. So do visit SIA app. You can get the complete formats, theory questions, past previous year questions, and very frequently asked questions. All these things you can get easily from SIA app. That's my suggestion. So balance as per cash book is given. That is the starting point. Add 1, 2, 3, 4, 5, 6, 7. Examples are given. Just you go through these 7 items. These are added. And less items are checks deposited but not cleared. 1, 2, 3, 4, 5, 6, 7, 8. 8 items are less. So after adding these items and deducting these items, balance as per passbook. We have started with balance as per cash book and ends with balance as per passbook. This is when favorable balance is there. Pro forma of BRS starting with favorable balance. Now, pro forma of BRS starting with favorable balance as per passbook. This was favorable balance as per cash book. Now, passbook. Again, balance as per passbook. Then add checks deposited but not created. Then all these 8 items are there. Then deduct. 7 items are deducted. Then bank balance as per cash book. When we start with passbook, we end with the cash book. Now, pro forma of BRS starting with overdraft balance as per passbook, OD balance. So, overdraft balance as per passbook, then add 1, 2, 3, 4, 5, 6, 7. Then less items 1, 2, 3, 4, 5, 6, 7, 8. Right? Then we get overdraft balance as per cash book. Lastly, pro forma of BRS starting with overdraft balance as per cash book. This is the format. Directly, if you read out, you cannot be able to understand. Logically, while doing the problem, we have to understand when we have to add, when we have to less. So here format is given. Now question. In examination, remember one theory, one problem. Theory jo aayega, what do you mean by BRS? And what is the procedure of preparing BRS? And what are the reasons that cash book balance and passbook balance may be different? What may be the reasons? Checks issued but not presented for payment. All these things that you have to remember. Note it down. Then one question, problem on BRS. This question was asked in June 2024 for 12 marks. That examination question I am going to explain. Now, on 30th April 2021, the passbook of Prasad showed a debit balance of 41,000. Passbook is showing a debit balance, means overdraft. Note it down. Favorable balance, overdraft. Favorable balance means our money is with the bank. And overdraft means we have taken a loan from bank. That means our cash book will show debit balance favorable. Our cash book is showing credit balance, it is overdraft. The opposite is passbook. Passbook showing a credit balance means favorable. Passbook showing a debit balance means overdraft. So here passbook is showing a debit balance. So 41,000 ये क्या चीज है? Overdraft. It is called overdraft, OD. Prepare bank reconciliation statement with the following information. Of 1, 2, 3, 4, 5. 6 items are given. Each item, some items we have to add, some items we have to deduct. Our starting point is bank balance as per passbook. So here, overdraft balance as per passbook 41,000. This is the first point you have to take in BRS. Because problem में दे दिया. It is given overdraft balance as per passbook is 41,000. Now check one after other. First item. Checks amounting to 15,600 were issued on 27th April or 2021, out of which checks of 11,000 were cashed up to 30th April. So 15,600 minus 11,000. So 4,600. 4,600 checks were issued. When we issue the check, our cash book overdraft will increase. Our cash book overdraft will increase. But passbook overdraft will show low balance because checks are not issued for, not present for payment. When passbook is showing low balance, it should be added. So this 4,600 should be added. Here you can see. Checks of 15,600 were issued, but only 11,000 checks were cashed. 4,600. Got it? जब checks issue करे, तो cash book का overdraft बढ़ गया. But passbook overdraft still showing less balance because the checks were not presented for payment. Right? So when passbook is showing less balance, we have to add. We have to add. See here, these problems are little bit difficult problems. So once, twice, thrice, if you watch the video, you can understand it. Compared to other topics like subsidiary book or journal entry, ledger account, this is little bit difficult. So twice I'm explaining. So one item is 4,600 over. Now second, a wrong debit of 800 has been given by the bank in the passbook. Passbook में by mistake wrong debit दे दिए. When we have given wrong debit, the overdraft balance have increased in the passbook. Passbook OD has increased. Now we have to decrease. So minus. This 800 rupees we have to deduct. See here. Here we have taken. Amount wrongly debited by the bank in the passbook 800 less. That's what you have to remember. किसको add करना है, किसको less करना. Logically think. Now, third point. A check of 200 was credited in the passbook but was not recorded in the cash book. A 200 rupees check was credited in the passbook. When it is credited in the passbook, our overdraft has come down in the passbook. Overdraft has come down in the passbook. Now we have to, what we have to do? We have to add. Because it is showing less balance, we have to add how much? 200. Here you can see 200. Check credited in the passbook but omitted to be entered in the cash book. 200. And the third item over. Now fourth item. Checks amounting to 21,000 were deposited for collection, but checks for 7,400 have been entered, have been credited in the passbook. 21,000 checks have been deposited, out of which 7,400 have been credited, already got in the bank. But remaining checks have been deposited but not credited in the bank. Before depositing the check in the bank, we record in the cash book. So cash book OD has come down. But passbook overdraft is showing more balance. So we have to deduct. We have to deduct. Mess. Yahan you can see here. Checks are deposited for collection but not yet credited. 7,400. If you find the difference, you'll get 7,400. Right? Then check for 1,000 returned dishonored and was debited in the passbook. When it is debited in the passbook OD have increased. Now we have to deduct 1,000. Deduct 1,000. Check dishonored, debited in the passbook. Last item is interest and bank charges amounting to 100 were not accounted for in the cash book. Interest and bank charges debited in the passbook. So passbook overdraft have increased. Now we have to deduct. So interest and bank charges 100 rupees we have to deduct. Here, interest and bank charges. All the items we have taken. Add items only two. So 4,800 add items. Add up 45,800. From 45,800, deduct items are 9,300. So ultimately, overdraft balance as per cash book 36,500. That's all. 12 marks question. Remember, BRS is little bit difficult. So with full concentration, watch the video twice, thrice, you can be able to understand. From the following information, prepare Mr. Mohan's BRS as on 31st October. Again, this was the examination problem asked in December 24 for 12 marks. Every time, one problem on BRS is must. So if you do not, understand this, if you have not practiced this one, you are not going to get 12 marks from this unit. So take it seriously. From the following information, prepare Mr. Mohan's BRS on 31st October 2021. So bank overdraft as per cash book, as per passbook. Just like the previous problem. Here also passbook is showing a bank overdraft, 16,500. So our solution, overdraft balance as per passbook 16,500. This is the BRS. This is the format of BRS. Right? Now, carefully remember. Checks issued but not presented for payment. When we issue the check, our cash book overdraft will increase. But passbook overdraft have not increased because these were not presented for payment. So passbook overdraft is showing less balance. We have to add. What we have to do? Add. How much? 12,000. Here 12,000. See here. Checks issued but not presented for payment 12,000. Third, checks are recorded in the cash book but not sent to bank for collection. 5,000 ke checks and we have recorded in the cash book. The cash book overdraft have decreased. Cash book overdraft have decreased. But passbook overdraft still showing more balance. So we have to deduct from passbook. How much we have to deduct? 5,000. So less 5,000. Checks recorded in the cash book but not sent to bank for collection 5,000. Then checks are deposited in bank but not collected 15,000. Some checks were received and we have recorded in the cash book. So cash book overdraft have decreased. But the banker has not yet collected the amount. The passbook balance is showing more balance. So we have to deduct. How much we have to deduct? 15,000. So here you can see 15,000. Checks deposited into bank but not collected 15,000. Let's me have. Then after that, Sri Devi directly deposited in the bank 7,500. Suppose a customer is Sri Devi. She has directly deposited in the bank without our information. So what will happen? Passbook balance will decrease. Passbook balance will decrease. Now we have to add. Right? So how much we have to add? 7,500. Sri Devi directly deposited in the bank 7,500 we have added. Bank charges debit in passbook only. When you open the passbook, it is showing bank charges debited. That means the passbook overdraft have increased. Passbook OD has increased. Now we have to deduct. How much? 500. So less में आ जाइए. Bank charges debited in passbook only 500. That is also deducted. Last one. Premium on life policy of Mr. Mohan paid by the bank on standing advice 400. Mohan has given a standing advice to the banker to pay insurance premium. The banker has paid the premium. When the banker has paid the premium, the overdraft balance has increased. Now we have to deduct. So this 400 should be deducted. Here, premium on life policy of Mr. Mohan paid by the bank outstanding 400. That's all. Problem over. Now few items are adding items, few items are subtracting. So two items are there, B and E. Add up 12,000 plus 7,000, 19,500. Add up 36,000. Now 36,000 means minus 5,000, 15,500, 400. Total 20,900. Subtract. So balance, overall balance as per cash book is 15,100. Two problems completely I have explained regarding how to prepare the BRS. And both these problems we have seen, the opening balance was passbook overdraft. But that is not the every time that will not be the case. The case may be favorable balance also. So now we'll see one more problem, final problem on BRS. So prepare a BRS showing the balance as per cash book on 31st March. We have to find out the balance as per cash book. Means balance of per passbook is given. Right? This was asked in April 2025, 12 marks. OE. So recent last year examination. So here 1, 2, 3, 4, 5, 6. Sixth item it is given the bank balance as per passbook showed 18,000. This is favorable. Last two problems we have seen it was overdraft. Now this is a problem where we have favorable balance. Our own balance in the bank. So our starting point, bank balance as per passbook. Here, BRS as of 31st. Balance as per passbook is 18,000. ये problem में दे दिया last item. Our starting point. Now one by one item. Only 5 items are there. Checks amounting to 10,000 paid into bank on 24th March, out of which 4,000 appears to have been credited in the passbook in the same month, and the remaining in the next month, that is April 2012. We are closing the accounts on 31st March. 31st March से पहले 10,000 के checks बैंक में deposit किए, but the credit was only 4,000. So 10,000 minus 4,000, 6,000 checks were deposited in the bank, but not yet credited. Before depositing in the bank, we record in the cash book. So cash book balance will increase, but passbook balance is showing less balance. Our starting point is passbook only. Starting point is passbook only. It is showing less balance. So we have to add. How much we have to add? 6,000. So checks paid but not cleared, 6,000. The next one is checks had been issued for 15,000, out of which 7,000 only has been encashed. 15,000 के checks issue करे, out of which 7,000 have been encashed. So 15 minus 7, 8,000. 8,000 checks were issued. When we issue the check, our cash book balance have decreased, but our passbook balance still showing more balance because it was not encashed. So we have to deduct, subtract 8,000. Here, checks issued but not presented for payment, 15 minus 7, 8,000. Right? So third item over, second item over. Now third, bankers have given a wrong credit to the firm's account 2,000. Bankers have given a wrong credit. That means the bank balance as per passbook have increased. The bank balance as per passbook have increased. Now we have to deduct. How much? 2,000. Subtract 2,000. Here. Wrong credit in the passbook, 2,000. Right? Third item over. Now fourth. Bank charges entered in the passbook but no entry appears in the cash book, 5. Bank charges are appearing only in the passbook. The passbook balance was showing less. Now we have to add. 500 should be added. This bank charges not recorded in the cash book, 500. Next, passbook shows a credit of 1500 towards interest on investment collected by the bank. When we open the passbook, it is showing a credit regarding interest on investment. When we receive interest, the bank passbook is showing more balance. Bank passbook is showing more balance. Now we have to deduct. Because our starting point is passbook only. So it is showing more balance. Now we have to deduct. So interest on investment collected but not recorded in cash book 1500. Over. So add items are only 4,000 plus 500, 4,500. Add up 22,500. Now subtract items are 8,000 plus 2,000 plus 1,500, 11,500. So 22,500 minus 11,500, 11,000 is the balance as per cash book. That's all. So this is the end of the problem. BRS. Over. So 3 units I have completed. I have explained each and every point what will appear. Right? Now, unit number 4. Depreciation. Only one topic is there. Topics covered under this unit will be concepts of depreciation, various types. In examination, we expect one theory, one problem, or both the problems also. But you should not expect both theory question, A or B. Both you may get problems or one theory, one problem, but you will not get both theory. The problem is compulsory. The question asked for 4 marks. Define depreciation. What is depreciation? It was asked in December 2017. So according to International Accounting Standard Committee, depreciation is spreading the cost of the fixed asset like machinery or building over its useful life. Decrease in the value of the asset due to use. But many authorities, they have said depreciation means spreading the cost of the asset over its economic life. अगर एक मशीन का वैल्यू 1 लाख है, 1 lakh rupees is the value of the machine, and the expected life is 5 years. Expected life is 5 years. So spread 1 lakh rupees in 5 years. So 1 lakh divided by 5, 20,000. So every year 20,000 value will decrease. That is called depreciation. So it is a process of allocating the total value of the asset over its life. The amount is recorded as an expense. Depreciation is also one of the expense, but it is a non-cash expense. Just like salaries, rent are cash expense, depreciation is a non-cash expense. All expenses should be considered to calculate the profit. Now, some different definitions are being given. Remember, all these theory you can get from SIA app. So do visit SIA app, subscribe, and definitely you can get all this theory material along with previous year questions, along with frequently asked questions, and complete content you can get from SIA app. One more question has been asked, May, June 24, 4 marks. Define depletion and amortization. Depletion is a term which is used when natural resources are used. For example, the coal mines, the oil fields, where natural resources are extracted. So the cost of that natural resource will be spread over the life of that natural resource. Example, an oil well is purchased for 1 lakh, and we expect that we can get the oil for 5 years. So that 1 lakh rupees will be divided by 5, every year 20,000. So for natural resources, we use depletion. For physical assets, we use depreciation. That's it. And amortization is the term which is used to write off the intangible asset, like goodwill, patent right, copyright, etc. Then one more question, calculate the amount of annual debt for 3 years by reducing balance method. Cost of the machinery 20,000, expected life 3 years, rate of depreciation 25%. This was asked in last year, April 2025, for 4 months. It's very easy. Problem is there. What is the cost of the machinery? 20,000. Rate of depreciation 25%. The first year, 20,000 into 25 by 100 is equal to 5,000. First year depreciation 5,000. Now second year, the book value of the machine will be 20,000 minus 5,000. पहले साल का depreciation minus कर देंगे, 20,000 minus 5,000, 15,000. That is the book value for second year. So 15,000 into 25 by 100, 3,750. Beginning of the year 15,000. Depreciation 3,750. Now third year, the book value is 15,000 minus 3,750. The value is 11,250. So 11,250 into 25 by 100, 2,812.5. That's all. So these are the 3 years depreciation. The annual depreciation is first year 5,000, second year 3,750, third year 2,812.5. 4 months. This is the simple problem which had been asked last year. Same type of problems may be asked. Now, this is in Kakatiya University, it was asked for 12 months. Define depreciation, explain the advantages, disadvantages of straight line method and diminishing balance method. There are many methods of depreciation, but the most commonly used method are straight line method and diminishing balance method. Yeah. So depreciation meaning straight line method and diminishing balance method. Advantages, disadvantages. But diminishing balance method, advantages, disadvantages. Then we can go through it from the material of CRM. Then what are the various methods of depreciation? The following are the various methods: straight line, written down value, diminishing balance method, annuity method, depreciation fund method, revaluation method, depletion method, sum of the digits method. For each method, explanation is given. So you have to go through all these definitions. Now I am coming to the main part, that is problems. Just now I have seen only 4 marks problem on depreciation. Now 12 marks problem. Problem on debt. A firm acquired machinery on 1st June 2020 at a cost of 95,000 and spent 5,000 for installation. So actually installation charges should be added to the cost of the machine. So 95,000 plus 5,000, 1 lakh rupees is the cost of the machine. On that 1 lakh rupees, depreciation should be provided. Its useful life is 10 years. The books are closed on 31st March every year. Show machinery account and depreciation account for 3 years. Last year it was asked. It's very simple. So machinery account, debit, credit. When we purchase the machine, the entry will be machine account debit, cash account credit. So here, cash or bank, anything you can say. Machinery account debit, bank account credit, or machinery account debit, cash account credit, anything. So here, bank. So 95,000 is the cost plus 5,000 is the installation charges. Total is 1 lakh. 1 lakh rupees debited. 1 lakh rupees debited, right? Now, its useful life is 10 years. So annual depreciation is 1 lakh divided by 10. 10,000. 1 lakh divided by 10, 10,000. So every year depreciation is 10,000 and this 10,000 will remain same because straight line method. Right? So by depreciation 10,000. So 1 lakh minus 10,000 is 90,000 is the balance carried down 31st March 2021. Because we have purchased on 1st July 2020. Year ends on 31st March 2021, 90,000. So this 90,000, right? Balance brought down 90,000 second year, 1st April 2021, right? Now second year depreciation. Again 10,000, 31st March 2022. By depreciation 10,000. By balance 90,000 minus 10,000 is 80,000. In third year, 1/4/2022, balance brought down 80,000. Depreciation 10,000. Every year depreciation remains same. Then balance will be 70,000. 80,000 minus 10,000, 70,000. Balance brought down is 70,000. That's all. One account we have prepared, that is depreciation. Oh, sorry, machinery account. Secondly, it is asking you to prepare depreciation account. Right? Every year, depreciation entry will be depreciation account debit, machinery account credit. Depreciation account debit, machinery account credit. So depreciation debit side to machinery 10,000. First year. First year completed. And every year depreciation should be transferred to profit and loss account. So here by profit and loss account 10,000. So every year depreciation account will get closed. Carried down, brought on balance will not be there. Only machinery account will have. So depreciation account. Debit side 10,000 credits. 1 year over. Now second year. To machinery 10,000 by profit and loss account 10,000. Second year closed. Third year to machinery 10,000 by profit and loss account 10,000. So 3 years account is closed. Finished. Now we have to start the next problem. Second problem. This was a problem again asked in July 2023, 12 months. Little bit difficult because here there is a sale of machinery also. Previous problem there was no sale. A firm purchased on 1st Jan 2014 machinery for 58,200 and spent 1,800 on its erection. So erection or installation charges will be added. So 58,200 plus 1,800, 58, 59, 60. The cost of the machine will be 60,000. Right? So here you can see machinery account to bank machinery 60,000. Right? Then on 1st July 2014, actually this was purchased on 1st January. On 1st July 2014, another machine for 20,000 was acquired. So in the same year, two machines are there. The first machine 60,000 and the second machine was 20,000. So here, 1st January to bank 60,000. Now again, 58,200 plus 1,800. Now 1st July to bank 20,000. Another machine was purchased. Then on 1st July 2015, the machinery purchased on 1st January 2014 becoming obsolete and was auctioned for 38,600. On the same date, fresh machinery was purchased at a cost of 40,000. The first machine was sold. The first machine was sold. On the same date, new machine was purchased. Right? Now, 31st July to bank 20,000. This is the next machine purchased. Now, depreciation account December 31st. We are closing the year. Machinery, second machinery, 20,000, 10 by 100 into 6 by 12. Because only for 6 months, 6 month of depreciation should be closed. Machinery, 20,000 into 10 by 100 into 6 by 12, 1,000. Balance is 73,000. So balance carried on, balance brought on 73,000. Now, 1st July 2015. 1st July 2015, by bank sale, 38,600. So to bank, 40,000. Another machine was purchased on 1st July, 40,000. Depreciation account machinery first. Because first machinery was used only for 6 months. So 54,000 into 10 by 100 into 6 by 12, 2,700 is the depreciation. Profit or loss? Loss on sale. How do we get loss on sale? I'll show it in the working note. By depreciation. Second machine depreciation 1,900 and third machine depreciation is 2,000. The balance carried down is 55,100. Now December, by depreciation, second machinery 1,007. 31st December, we are closing the account. So balance is 49,500. How do we get the loss? Here, calculation of profit or loss on sale of machine. Cost of the machine purchased as of 1st January is 60,000. Depreciation first year 6,000, second year 2,700. Total depreciation 8,700. 60,000 minus 8,700, 51,300. Subtract. Less sale value 38. मशीन का वैल्यू है 51,300 और उसको सेल किया 38,600. तो लॉस ऑन सेल ऑफ मशीन इज 12,700 is the loss. One more last problem, we'll do it on depreciation. This is December 2024. OU, 12 marks. On January 1st, 2015, a machine was purchased for 40,000 On 1st April 2016, another machine was purchased. It's all for 30,000. So 1st January, first machine purchased, and 1st April 2016, another machine was purchased. On 31st December, half of the first machine was sold for 600. Depreciation was charged 10% per annum on diminishing balance method. Prepare machinery account for the year ended 31st December 2018. So from 2015 to 2018, we have to make the machinery account. First machine was purchased on January 1st, 2015 to bank 40,000. This one over. Now, we'll close the accounts on 31st December. Every year accounts are closed on 31st December. तो 1st January से लेकर 31st December को close कर देंगे. 2015 December 31 by depreciation. 40,000 into 10%, 4,000. First year में पूरा depreciation. Machine purchased on January 1st and we close the accounts on December 31st. So 1 year depreciation. So 40,000 minus 4,000, 36,000 is the balance. Balance carried down 36,000 and balance brought down 36,000. Now we are in second year 2016. Ab 1st April 2016 another machine was purchased for 30,000. So debit side April 1st to bank machine 2 30,000. Now we are having two machines, right? Now depreciation we have to provide. By depreciation, first 40,000 minus 4,000, 36,000 is the book value. So 36,000 into 10%, 3,600. अब second machine जो purchase करे 30,000 machine है, this one, and this is used for 9 months because from April 1 to December 31st, April, May, June, July, August, September, October, November, December. So 9 by 12, 30,000 into 10% into 9 by 12, 2,250. So here 36 plus 30, 66,000. 66 minus 3,600 minus 2,250. So balance is 60,150. ये आ गया balance brought on 60,150. Now, during this year, again depreciation. By depreciation, 32,400, 10%, 3,240. Depreciation, 27,750, 10%, 2,770. So 60,150 minus 3,240 minus 2,770. 54,135. Right? 54,135 is a depreciation. First machine. Half of the first machine was sold. So half. So 29,160 ka 10%, 2,960. This is the depreciation on machine which is sold. And the remaining machine depreciation is 2,497.5 into 10%. So bank sale 600 rupees ka sale kar diya. Loss on sale of machine is 12,520. Now balance is 35,599.5. That's all. Now calculation of profit or loss on sale of machinery. Purchase करे थे 20,000 1st January. First year depreciation is 2,000, 10%. Value at the end of 2015, 18,000. Second year depreciation, 10% of 18,000, 1,800 minus 16,200 book value. Third year depreciation, 1,620 minus karo, you'll get 14,580 book value at the end of 2017. Now fourth year depreciation, 1,458. The book value of half of the machinery on the date of sale is 13,122. Sale proceed is only 600. The loss on sale is 12,522. So we have done the revision for 4 units. One more last 5th unit is there. Now I'll take 1 minute break to have water. Then I'll continue the 5th unit. Last 50 minutes. So we'll resume our session. Last unit is unit number 5, final accounts of sole trader or financial statements of sole trader. The final accounts consist of profit and loss account and balance sheet. So every business wants to find out how much is the profit earned or loss incurred during the year and how much is the assets and liabilities at the end of the year. These two combined together constitutes final accounts. Again, last question. In this question in examination, most probably you will get one theory, one problem, but problem is compulsory. The final accounts problem is compulsory in every examination. So topics covered: final accounts, capital and revenue expenditure. This may be asked in theory. Problematic: preparation of final account with adjustments, right? Now, last year, one question was asked for 4 marks, short question. Explain in detail about closing entries. At the end of the year, when we prepare final accounts, we have to pass closing entries. Closing entries means some accounts will be closed and some accounts will be carried forwarded. Example, all the revenue accounts will get closed. All the capital accounts will not be closed, will be carried over to the next year. So entries will be passed. Example, adjustment regarding depreciation, adjustment regarding provision for doubtful debts, outstanding expenses, prepaid expenses. Yeah, outstanding, prepaid, depreciation, provision for doubtful debts, all these are the adjustments to be made at the end of the year. And entries have to be passed for these adjustment entries. And this is called closing entries. So closing entries are the final journal entries made at the end of the accounting period to transfer the balance to temporary account, nominal account, to a permanent account, usually capital or retail. So ये theory question पूछा था last year. Now ascertain the cost of goods sold. This was asked in June 2024, 4 marks. Problem from this final accounts, they have asked for 4 marks. It's very easy. What is given? Opening stock is given, direct expense are given, purchases are given, closing stock is given. What you have to find out? Cost of goods sold. Now remember, for calculating cost of goods sold, we have the formula. The formula is opening inventory, opening stock plus purchases minus closing stock, right? And plus direct expenses. So opening stock 40,000, then add purchase 2,36,000, direct expense also added 44,000, total 3,20,000. From total value of goods less closing stock 60,000. Then cost of goods sold. We got the cost of goods sold 2,60,000. That's it. So easily you can calculate opening stock plus purchases plus direct expenses minus closing stock. That will give you cost of goods sold. Now, one question was asked last April 2025 regarding 4 marks. Write the adjustment entries. Journal entry we have to pass. Outstanding wages 5,000 and outstanding rent 550. So outstanding wages, actually already wages have been paid, debited. Now still wages are to be paid. So entry will be wages account debtor to wages outstanding account. And a wages account should be debited and a new account outstanding wages should be credited. So here wages account debit, outstanding wages credit. This is the first entry, right? Now second entry. Outstanding rent, same rent account debit, outstanding rent account credit. Third, second one, provision for depreciation at 5% on freehold premises of 2,50,000. The premises value is 2,50,000. Depreciation rate is 5%. So 5% of 2,50,000, it will be 12,500. So entry will be depreciation account debit, premises account credit. So here you can see depreciation account debit, freehold premises account debit 12,500. So 5% of 2,50,000, 12,500. Last one is provision for depreciation over prepaid insurance, 2,000. Insurance paid in advance. So prepaid insurance should be debited. Insurance account should be credited. So prepaid insurance debit, insurance account credit, 2,000. That's all. Easily you can score 4 marks. Remember the entry for outstanding and remember the entry for prepaid and depreciation. That's it. One theory question very frequently asked in examination, it was asked in June 2024. So there are more chances you may get tomorrow's exam also. What is capital expenditure? What are the differences between capital expenditure and revenue expenditure? The difference, capital expenditure means the expenditure incurred to acquire the fixed assets. The expenditure whose benefit will accrue to the business for a long period of time. एक बार खर्चा करें कई साल तक benefit मिलेगा, that is called capital expenditure. Revenue expenditure is the expenditure which gives the benefit only for 1 year. This year you spend the money, this year only you will get the benefit. If you want to get the benefit next year, again you have to pay the expense. Example, salaries, rent, telephone bill, electricity bill, revenue expenditure. Purchasing the machine, purchasing the furniture, that is a capital expenditure. So here differences are given between capital expenditure and revenue expenditure. For detailed, again I suggest you go to the SIA app. You will get the complete theory. Now, problems on final accounts. Finally, these problems are very, very important from examination point of view. The trial balance of Sairam on 31st March 2020 was as under. So trial balance is given capital and drawings. So debit side is capital. See here. This debit side is capital. Oh, sorry. Debit side is drawings, not capital. Capital always shows credit balance. So 3,60,000 is the capital and 12,000 is the drawings, right? Plant and machinery on 1st April 2019, 1,40,000. Plant and machinery on 1/10/2019, 10,000. Beginning of the year, we have plant and machinery 1,40,000. Or during the year, 1st October, they have purchased 10,000 more. And stock on 1st April 2019, opening stock is 1,30,000. Purchases and sales. Debit side is purchases and credit side item is sales. So purchase 364,000, sales 4,40,000. Returns. Debit side is sales return and credit side is purchase return. It will not be specified in the problem. You have to remember. Debit side जो रहता वो sales return और credit side जो रहेगा वो purchase. Furniture 10,000, debtors and creditors. Debit side is debtor and credit side is creditor. Carriage outward 1,000. Then after that, we will have freight and duty 4,800, trade expense 1,600, printing and stationery, rent rates and taxes, postage, reserve for bad debts 1,600. Insurance, wages and salary, cash in hand, cash in bank, rent by subletting premises, total of the trial balance. Trial balance is tallied. So our balance sheet should also get tallied. Now, some adjustments are given. Stock on 31st March 2020. And remember one point, the trial balance items will appear only once, either in profit and loss account or in balance sheet. But adjustment items will appear twice. Once it will come in profit and loss account, again it will go to balance sheet. Then write-off 1,200 as bad debts and reserve for bad debts at 5%. Depreciation 5% on furniture, 20% on plant and machinery. This was the problem asked in June 2020 for 12 marks. And remember, tomorrow's exam also we will get inshallah the problem on final accounts. Trading and profit and loss account of Sairam for the year ended. First of all, remember 4 items are compulsory in trading account. Credit side, sales and closing stock. Always. Sales and closing stock compulsorily will take. So in the problem it is given sales. Here you can see sales 4,40,000. So 4,40,000 sales we have taken, right? And less return. Sales return is also there. Here, sales return 4,000. So 4,40,000 minus 4,000. Here, 4,40,000 minus 4,36,000. Next is closing stock. Closing stock will be given in the adjustment, 28,000. This 28,000 we have taken here. So credit side, only two items. Debit side, opening stock, 1,30,000 given in the adjustment, given in the trial balance. Closing stock will be given in the adjustment, but opening stock is given in the trial balance, 1,30,000. Then purchases. Just now we have seen purchases are 3,64,000. Purchases are 3,64,000. From purchases we deduct purchase return. Purchase return are 2,000. So 364 minus 2, 362. 362,000. Wages and salaries. If it is given salaries and wages, we would have taken in profit and loss account. But wages and salaries, if it is given, then it should be taken in the trading account. First word you have to see whether wages are given or salaries. So here wages and salaries 42,600. That's all. Now we take the credit side total. The credit side total is 534,600. From 534,600 deduct the debit items. We are getting gross. Achha, debit side is more. In this problem, debit side is more, credit side is less. So we are getting gross loss. Agar credit side zyada raha, तो we'll get gross profit. If debit side is more, we will get gross loss. So here debit side is more, credit side is less. So we are having a gross loss of 70,600. So by gross loss carried down 70,600 to gross loss brought down 70,600. Right? Now from here onwards we'll take all the profit and loss items. Now by rent of subletting the premises. In the problem it is given rent by subletting the premises. It is an income because it is given in the credit side. You can see here rent by subletting the premises 3,200. Rent is not paid, rent is received. That's why it is given on the credit side. So it is other income. So here by rent by subletting the premises 3,200. Now debit side to gross loss already we have seen. To carriage outward 1,000, to freight and duty 4,000, trade expense 1,600, printing 800, printing and stationery, rent and rates 9,600, postage 1,200, insurance 1,400. To depreciation on furniture 5%, 500. To depreciation on plant and machinery 29,000. To bad debts 1,200. Bad debts return. To reserve for bad debts 5,000, 5%, 3,060. Less already provided. Now see here. Provision for doubtful debts. When you calculate, already existing provision is also there. This is the old reserve for bad debts, old 1,600. New reserve, we have to find out here. Reserve for bad debts 5%. How much are the debtors? Debtors 61,200. From 61,200, first you deduct 1,200. 61,200 minus 1,200, 60,000. On 60,000, 5%, 3,000. 5% is 3,060. So 3,060 must already provided is 1,600. So deduct 1,600, 1,460 is the amount. Now debit side is more, credit side is less. So we are getting by net loss carried down 1,19,160. So net loss we are getting. So this is the end of profit and loss account. Now balance sheet as on 31st March 2020. Capital 3,60,000. So capital में से minus करेंगे net loss 1,19,160. So 2,40,840. Minus drawings 12,000, we get 2,28,840. And one more liability is the creditors. That's all. Only two items on the liability side, capital and creditors. Now asset side. Asset side, we have furniture 10,000 minus depreciation 500. So 9,500. Then plant and machinery 1,50,000 minus depreciation 29,000. 1,21,000. Then cash in hand 12,400, cash at bank 41,000. Closing stock 28,000. Debtors 61,200 minus bad debts 1,200 written off. Right? Then minus reserve for bad debts 3,060, 56,000. Now the total of the balance sheet is 2,68,840 asset liability side and 2,68,840 assets. Balance sheet correct. Now depreciation should be calculated on both the plant. Beginning of the year plant 1,40,000. During the year plant purchased was 10,000. So total plant cost is 1,50,000. Depreciation on the old plant 20%, 1,40,000, 20%, 28,000. Depreciation on new plant purchased during the year 10,000, 20% for 6 months 1,000. So 1,50,000 minus 28,000 minus 1,000, 1,21,000. So total depreciation is 29,000. That is the first problem. Now, second problem on final accounts. This was asked in December 2024 OU for 12 marks. Comparatively a small problem. From the following details, final accounts of Naveen and Company for the year ended 31st March 2021. Capital 1 lakh, cash in hand 1,200, purchases 1,20,000, bills payable, stock, opening stock, debtors, creditors, salaries, furniture, plant and machinery, sales, bills receivable, rent and taxes, wages, reserve for doubtful debts. Now adjustments. Stock on 31st March, end of the year, closing stock 40,000. Outstanding rent 2,000, wages 3,000 and salaries 4,000. These three items are outstanding. Provide depreciation on plant and machinery at 5% and furniture 10%. Increase the reserve for bad and doubtful debts at 2.5%. That's all. So compared to the previous problem, this problem is simple one. Only few items are there. So first of all, trading and profit and loss account for the year ended 31st March. 4 items we have to take in trading account. Sales 2,200,000. Here it is given 2,200,000 sales. Closing stock is given 40,000. So 40,000. Only 2 items on the credit side. Debit side, opening stock 35,000. You can see here. Opening stock 35,000. Purchases 1,20,000. Here purchases 1,20,000. No purchase return. Wages are 16,000, but here outstanding wages are 3,000. So 16,000 plus 3,000, 19,000. So credit side is more, debit side is less. So 2,200,000 plus 40,000, 2,40,200, and debit side. Okay, so just if you have any doubts, just to give it in the comment. I'll try to resolve your doubts. 16,000 So sorry for the interruption. Now we'll continue our class. So sorry for the interruption. So what I'm telling about the wages. The wages paid are 16,000 and the wages outstanding are 3,000. So 16 plus 3, 19,000. Take the total on the credit side minus debit side, you will get a gross profit transferred to profit and loss account 66,200. This is the gross profit. Previous problem we got gross loss, but in this problem we are having gross profit because credit side is more and debit side is less. So here gross profit we got. So by gross profit brought down, how much is the gross profit? 66,200, right? Now debit side. Always we begin with salaries. Salaries paid, add outstanding salary. You can see here salaries are 20,000, outstanding salaries are 4,000. So 20,000 plus 4,000. 24,000 is the salaries. Now depreciation on plant and machinery 60,000, 5%, 3,000. Depreciation on furniture 15,000 into 10%, 1,500. Reserve for bad debts. Reserve for bad debts is new minus old. New bad debts, new provision, if you calculate, it is 1,250. And in the trial balance, it is given old balance 1,000. So 250 is the balance. Here you can see 250 is the reserve for bad debt. So remember, new reserve minus old reserve. The new reserve is given in the adjustment and the old reserve is given in the trial balance. So 250. Then add rent taxes 10,000, add outstanding 2,000. Here it is given. Rent and taxes 10,000 and outstanding rent is 2,000. So 10,000 plus 2,000, 12,000. This is the 12,000. Now credit side, if you take the total, from that deduct the debit side, you get net profit 25,450. So finally 25,450 is the net profit as per profit and loss account. Now it is asking you to make the balance sheet. So 1 lakh rupees is the capital, add net profit 25,450, total 125,450. Then liabilities, two liabilities are there. Bills payable 22,000, creditors 24,000, then outstanding rent, outstanding wages, outstanding salaries 9,000. So liability side completed. Now asset side. Asset side, furniture 15,000 less depreciation 10%, 1,500. So 13,500. Then plant and machinery 60,000 less depreciation 5%, 3,000, 57,000. Debtors 50,000 less new reserve 2.5%. So 50,000 into 2.5%, you get 1,250. So 48,750. Bills receivable 20,000, cash in hand 1,200, closing stock 40,000. Balance sheet tally 1,80,450. That's all. So this is the end of second problem. Two problems I've explained on final accounts of sole trader. Now third and final problem on this final accounts. Prepare trading and profit and loss account and balance sheet as of 31st March 2015 from the following trial balance. So trial balance is given and some adjustments are given. This was asked in Kakatiya University for 12 marks. Now, debit side, salaries, purchases, wages, carriage on purchases. Carriage on purchase should be taken in trading account. Office expenses, bad debts, debtors, machinery, insurance, bills receivable, opening stock, cash in hand, cash at bank, total. These are the debit side. And credit side items are capital, sales, discount. Discount is given on the credit side. So it is discount received. Two types of discount. Discount allowed and discount received. Debit side diya to discount allowed. Credit side diya discount received. Creditors, bills paid. Adjustments are closing stock 10,000, outstanding salary 1,000, wages 2,000. Prepaid insurance 100. Provide for reserve for doubtful debts 5% on debtors. Depreciate machinery 5%. So simple. Now, it's very easy to find out the gross profit. Trading account. Two items on credit side, sales and closing stock. By sales 47,000, by closing stock 10,000. Only two items. Debit side, opening stock plus purchases. Opening stock 7,000, purchase 26,000. Apart from that, wages are there. Wages is a direct expense that should be taken in trading account. So wages 7,200, outstanding wages 2,000. Here it is given outstanding wages 2,000. So add कर देंगे 7,800 plus 2,000, 9,800. Carriage on purchases, that should also be taken on the debit side. Over all the debit items are over. Right? Now, take the total of the credit side. 47 plus 10, 57. From 57, minus 7,000, minus 26, minus 9,800, minus 400. The gross profit is 13,800. So we have completed the trading account. 13,800. Now, by gross profit brought down 13,800. Now we are in the profit and loss account. Salary 7,000, add outstanding salary 1,000. So total 8,000. Office expense 1,100. Bad debts are 1,200. Insurance 400. Prepaid insurance minus करेंगे. Insurance minus prepaid insurance. Then provision for doubtful debt 5% of 30,000 is 1,500. Depreciation on machinery 5%, 30,000. Okay, finished. Now credit side total. Credit side we have not seen. Discount receipt. Gross profit we have taken. Discount received is 200. So total is 14,000 minus debit items. We get net profit of 1,250. That's it. Now finally, the balance sheet. The balance sheet is capital 25,000, add net profit 1,250. So we'll get 26,250. The liabilities. Creditor is a liability. Bills payable, outstanding salary, outstanding wages. That's all. 57,050. This is the total of the liabilities. The same total we should get on the asset side. So machinery 13,000 minus depreciation 650. So 12,350. Debtors less provision 28,500. Bills receivable, closing stock, cash at bank, cash in hand, prepaid insurance 57,050. That's all. This is the end of the balance sheet. That's all. So I have completed all the 5 units in this 2-hour period. Briefly, I will recap the points so that you can get the overview what we have discussed in this 2-hour session. Unit number 1, accounting process. In that, what is accounting? Then what are the different types of accounting? Financial accounting, objectives, advantage, limitations. Then we have seen the trial balance. What is accounting cycle? So many students are asking me the important questions. Now remember, in unit number 1, the important question, note it down for tomorrow's exam. Accounting concepts. And secondly, what is accounting and what are the functions of accounting, objectives of accounting. And the problem is regarding journal entries. Regarding journal entries. That's it. That is in unit number 1. Unit number 2, subsidiary books. The important is 3-column cash book. 3-column cash book and rectification of errors. The second unit, I expect compulsorily you will get 2 problems. One problem from 3-column cash book, the other problem will be from rectification of errors. I have explained you these 2 problems. Then unit number 3. Unit number 3, we have seen bank reconciliation statement. In BRS, I expect both problems. Both problems I expect. But rarely they may give one theory, one problem. But problem is compulsory. Then 4th unit, depreciation. Again, one theory, one problem I expect, but there are chances both problem, but problem is compulsory. So have a good practice on problem of depreciation. Last unit, unit number 5 is final accounts of sole trading concern. Just now 3 problems I have explained. Watch these 3 problems once, twice, thrice. Definitely you are going to get good marks in examination. Any other comments? Just give me the comments. I'll try to answer those questions and queries. Hope This 2 hours, explanation, it will be very much helpful to you. With confidently, you can write. I expect those who are watching, those who have watched all the 2 hours full period, definitely you are going to do very good in examination tomorrow. So be confident, be optimistic. Definitely you are going to do very good in examination tomorrow. What are the queries, comments? Most important question, if you can give, you sir. Yes, just now I told you the important questions every unit. What are the important questions that may be asked? Same, almost every student are asking the same thing, that is important question. Very good. Please check 5-star questions. Let's see at the end of the class. I think end of the class, just now I told you now what are the important things to be remembered. I'm ready with my preparation without taking single regular class. Good. Go ahead. So almost most of the students are asking for important questions. What is BRS? One student is asking, what is BRS? Bank reconciliation statement is a statement which is prepared to find out the reason for the difference between cash book balance and passbook balance. Why the cash book and passbook balance are different. To find out that reasons, we prepare a bank reconciliation statement. So one student says, Jazakallahu khair wa iyyakum. Thank you, sir. You are most welcome. I wish you all the best for your exams. 12 marks questions, sir. I told you in every unit, 12 marks question, most often problems will be asked. But be prepared for the difference between closing and adjustment entry. Very good. Adjustment entry is also one of the closing entry. Adjustment entries are regarding depreciation, reserve for doubtful debts, prepaid expenses like prepaid insurance, or then outstanding salary, outstanding wages. These are called adjustment entries. Whereas closing entries means we have to close all the nominal accounts to trading profit and loss account, and capital items will be carried forward. Important questions, please. So important question, just now I told you, first unit, you have the important question like what are the accounting concepts and conventions, and what is accounting, right? Those are the important. The accounting process or final accounts. One student is asking accounting process. Yes, that is also important. We have different stages in accounting. First stage, identifying the transaction, recording the transaction, then posting it into ledger account, trial balance, profit and loss account, and balance sheet. This process will be repeated. Part A, important question. I told you in the beginning, part A is very much uncertain because we don't know from which unit the question or theory question will be asked in part A. That is very uncertain. That's the main problem in part A. Sir, can you give gunshot questions? Whatever I'm saying are gunshot only. Example, first unit, this one. Second unit, subsidiary books. Subsidiary books, you can get the question on 3-column cash book, particularly 3-column cash book. And secondly, rectification of errors. Compulsory you are going to get. Part B, important questions. So accounting process, important problems. Whatever I explained, that is important only. Great explanation, Hashim sir. Thank you very much. You are most welcome. Journal entries. Yes, first unit journal entries are very, very important. Part A, Part B, important questions. Part A, important questions. So please, very important questions. Just to watch my video again and again, 2-3 times, we are uploading on the channel. So just watch the video 2-3 times. Definitely you can be able to understand. So please, very important questions. Okay, then I wish you all the best on behalf of CR Publications, CR Digital Classes. I wish you all the best for your preparation and for your exam tomorrow. Okay, goodbye.